Hey, this is Jack from Alpha Charts with a state of the market video. Today is Saturday, August 26, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Before we get started, if you have not liked and subscribed to my videos, please subscribe to my YouTube channel. It does help me out, and I do appreciate everybody that does that. Thank you so much. If you find me on Twitter, I'm at AlphaCharts365. Posting all kinds of stuff there, almost exclusively market related. And I think there's a ton of information I share there for free. If you like my information, I go much deeper and much further with my subscriber group. Here's all the different things I offer them at the minimum, and I do much more than this as well. If you're interested at Alpha Charts 365, click on subscribe. Let's get to these charts. All right, S&P 500. So we were cautious, at least me and my subscriber group, and I think I shared it with you guys too, that things were not looking great back here. And, really they haven't been doing well, right? I mean, it's been pretty rough. Thursday this week was pretty nasty. Interesting, this was a Thursday as well. This candle reminds me of this Thursday right here a lot. But when we zoom in, we can see that we are still underneath a flattening 50-day, underneath falling moving averages. Even though this was, I like that this held this area right here, this, we'll call it 43.56-ish area. It's still underneath all this weight of the market. And so that's a problem, right? On the week, I think it was up on the week, right? So it was up 0.82 on the week. RSP was down. There's your divergence, right? We talked about this type of divergence between RSP and the SPX, so the equal weight S&P versus the cap weighted. And you can see one was up, mega caps, right? A big part of that probably was NVIDIA helping to hold it up some, and the other mega caps. And versus the equal weighted, which is not doing quite as good now. It's still, it's just sitting on the 200. It has not broken it yet, but it's right there, right within $1 of the 200. So very easy for this to get below the 200 and already have a flat to almost declining 50-day. Again, so equal weight looks much worse. That is to me, not a good sign at all. Looking at the Qs, we identified this area as important. It broke out. We were pretty excited. And then again, towards the end of the month, that Thursday, it made a lower high. And now it's building out a topping formation. Whether this turns out to be a head and shoulders or not, I don't know. But it's got a well-defined neckline. This 354, 355-ish, about 355 is the neckline. So if this builds out a right side and breaks 355, I think, we're going to retest 332, 333-ish area pretty easily. Again, same like the other chart, you have a flattening 50-day where the market is basically on the chart. I did like that at least this was a higher volume day as it kind of pushed higher. But so I'm not going to put too much into that yet. All right, because again, it was a pretty crappy looking day, right? It was in the lower, it tried to push slower, and I think it's going to, but we'll find out. I don't want to make too many guesses. On the week, it was up 1.64, yay. But equal weight 0.91. Again, it was still up the equal weight, but there is that slight divergence there. And really on the weekly, inside bar. Let's see if Qs were inside bar too. Qs we're not inside bar. Interesting. Anyway, so it tried to push higher and couldn't, and now it fell back in. So either way, you see that outperformance by the cap weighted, which tells you again that there are the mega caps and the larger names are helping to buoy the market this past week, but the weight of the market looks like it's still on the chart. IWM, looking at the small caps, they were flirting with the 200-day as well. Try to push lower again, held in this general area. So this pivot, this 181-ish, 182, we'll call it, area, is going to be very, very important. And that is right where the 200-day is. And we'll see. But you know how I feel. Weight of the market is, to me, this looks more like a bear flag with one more leg down than it does anything else. Again, we identified the volatility and the expansion back here. This was a big deal. And it turned out to be a big deal. And now we have this little fall. Now, if this breaks back up, and expectations, this has another leg down. If this breaks back up, and that's expectation breaker, that'd be a super bullish scenario. We're not quite there yet, right? On the week, IWM, as I would have expected, was down 0.35, down on the week though. So another week down and not pretty look to it. Let's just be complete and look at the mid caps. Again, very similar to the IWM. There's your flat 250-day right there. There's your 200-day. Isn't quite sitting on it yet, so maybe a little bit healthier, but not by much. And if I extend this, you kind of see what's going on here with this potentially like contraction in here. And again, I think that could be a significant contraction. We'll find out. But mid caps aren't looking all that much better. And on the week, they were actually up though. So 0.07. So outperformed the small caps. All right. I'm a big mid cap fan. I think a breakout above this $500 level would be one of the most bullish signs that we can find in the market. All right. Let's go to the ETFs, XLF. Underneath the 200-day now, which is a big problem. You have this trend line, could not get above it. You got all this weight on the market again over. Look at that. Oh, so bad. So bad. I just don't. I mean, this is like, it's gonna be hard to get through all this traffic. Maybe it does, but not pretty. Not pretty at all. $30 is still our major level that it has to hold, right? If not, as long as $30 holds, we're just in a nasty consolidation. Looking at SMH, the false breakout up here. As my charts load, there you go. False breakout up here. That was one of our signs. Now we have this flattening 50-day again. You see, it's very repetitive what I'm saying because it is repetitive. Flattening 50-day, and I think it was down on the week too. No, there's slightly up on the week. Oh, 2%. Look at that. So the week semis were up 2%, but you see the big sell-off. That's mostly the NVIDIA earnings, right? That was a big thing. It's a big thing in the market on Thursday. NVIDIA selling off after it blew earnings away. To me, this looks like it wants lower. Very likely this gap in here, which was from a prior NVIDIA earnings, may get filled, right? And then we'll see. So this is, this 130-ish area, which is about right where this 200-day is. That's what I'm looking for to see if support can be found anywhere in here. We'd only know after the fact, but that's a potential area, again, hitting the 200-day. I can see that with a lot of charts too. The 200-day being a big deal. XSD, which is the equal weighted semiconductors. We look at that sometimes because it kind of keeps everything legit. Was up 1.17. So semis had a good week all in all. And remember how I said, expectation breaker. This was what I would consider expectation breaker. I would have expected this to break lower, and it broke higher. And that for me was extremely, that was a very positive outcome over here, right? That was on the weekly chart. And this actually is what started the rally for June and July. Right, the expectation breaker. Anyway, the point is things are not looking good in semi land. Transports. So in transports, we had a nice, beautiful breakout, and we were very, very excited about this breakout. And then we said, oh, but here is kind of a rising wedgie look. It doesn't mean it's gonna break down, but we got to watch it. And it did break down. Now it's back below its breakout. Again, underneath a flattening 50-day, lots of weight in the market on transports. And then looking at housing, We had a beautiful cup and handle form right here. We talked about how bullish this was and it looks great. And then we talked about this being sneaky distribution, and it looks like, and now we're starting to come back in to take out some of these levels. Again, you see housing starting to break down. Further breakdown, I think we can easily get again to the 200-day, which is the original breakout, and then we'll see what happens at that point, right? 74-ish area. But again, so looking at the indexes, not looking great. Looking at the ETFs, not looking great, right? Definitely a cautious look to it. Let's look at the internals and see what they have to say on things. And I'm going to just take off my pieces here, and let's go to the VIX. So the VIX has been the one thing that's been like, what the heck is going on, right? Not the one thing, one of the two things. Because with all the volatility that we've seen, it came back in, right? I mean, so now we have NVIDIA out of the way, Jackson Hole out of the way, not a ton of stuff, information-wise going on. We still have inflation data coming out, but still, it's not spiking the VIX. Like, I feel like there's a disconnect between what's going on and what the VIX is telling us. We still are making higher highs and higher lows in the VIX. So there's that, but it's very stair-steppy. We're not seeing spiky. This is not like it's not capitulatory, which means that we may be doing this for a while, maybe. The other thing that's weird is credit spreads. They're not spiking. So those are the two things that said, hey, this may be just a run-of-the-mill pullback in the market. Now, if history is our guide, right? If history is our guide, we have run-ups, consolidations, run-ups. Then we have this, flat period. Then we have a run-up, consolidation, run-up, flat period. Run-up, consolidation, run-up, flat period. Run-up, consolidation. Well, if history is our guide, there should be a move higher in credit spreads here, a credit event, right? Because we've seen going back to 2008, going back to 2015, going back to 2020, that is, again, that's the what's happening. Now, we don't know if that is going to happen again. Sample size is small, right? This is number 4, but that is, from history, the best expectation we have. It's just not happening right now. So do we need this to happen? I don't know. Maybe. This was capitulation, right? This was the sign of the end. Maybe we're just not near the end yet. Maybe we're still in, somewhere in here. Maybe we're in this part right here, right? It looks kind of similar. Maybe we're in this part. That's a possibility. We'll see. But yeah, but VIX and credit spreads not budging is what it is. Let's look at the put call ratio. This is a sentiment measure. We had a little spike again on Thursday, and then it came right back in. So again, not at extreme, so no real signal there. And looking at breadth, let's go look at breadth here at that 33%. So it is definitely falling, as we can see, but not in any extreme, serious way. So there is a chance for another push lower, I think. Whether it happens or not, again, we'll see. Expectation breaker would be a push higher, right? And we'll take it one day at a time. But to me, it's in that no man's land. The dollar is running the show, and we're up to 104. And this super important area, let's go back to here just so you can see. This 104, 104.50 area is now the most important area. And then we'll go up to 105 to 106-ish will be the next most important area, right? But we did break the downtrend line. Now we're up to here. You may see some pullback, which could give equities a little boost, but a break above this area would be very, very bearish, I think. We're not quite there yet, but this is not a good look. And again, it's been relentless, the dollar, after the whoops breakdown. So the next major area is right, we're at it, basically. We'll see, kind of breakout here would be a problem. Above 105, big problem, and as it moves higher, huge problems, right? And again, we don't know if it's going to happen, but it looks more like a bottom than a top, right? Again, there may be some vacillations along the way, but not looking great. That's the dollar. Let's look at 10-year yield. Another one that looks more like a bottom than a top. And if you go to the weekly, you can see this a little bit better. you had a big move off the lows. And you see that this 5% area, right around 5 to 6, 5 to 5.5, we'll call it. This 5 to 5.5% area is a big area above it. This resolution is expected to resolve higher. Like any other technical analysis we do, if the trend is higher, I'm expecting it to break out of this area and move higher. Hasn't done that yet, but that would not shock me. And let's be honest, yesterday, Jay Powell said at Jackson Hole, hey, we're data dependent basically, and we may not stop raising rates. We may need to do more. And that's kind of what the chart is saying. It's expecting rates to go higher. Now, once we get to 5% or so, we'll see what happens, right? And just to round out the video, look at the copper gold ratio, and it's still kind of not really doing much. So there's not much to say about that. Okay, so let's wrap it up. S&P 500, or the market in general, we'll talk about, it still has a lot of weight on it. It still is looking heavy. Still looking heavy. I think another leg down. This is 1, 2, 3. It's kind of like, if I can find my tool in here. I never know where these tools are, man. No, that's not it. All right, doesn't matter. The point is 1, 2, and then I think maybe one more leg down. I think a date with the 200-day moving average is very likely. Not means it's going to happen, but that's what I am. I am cautious the market, and that's it. If you want to be a subscriber, I do much more in-depth and information as far as what the market's doing, and I don't want to bore you with this stuff, but become a subscriber. It's worth the money. It's $10 a month. It's totally worth it. Hope you all are having a great day, and good luck this week.